All right. What's up, people? We're back. Streets at the charts. Today, I'm gonna do a quick review on US100, US Tech. So let's jump in. There was a beautiful trade I was on yesterday, which was the 28th of November, 2024. So let's get this. Let's get it started. So straight up. Okay, so I first start by, which is always the night before. It's always the night before. The night before the day opens, I always go back to look at, my trade on the daily time frame. Look at the reasons why I should, have a trade for the next day. And so that's also one of the reasons why it's always good to do your analysis at the close of the day, which is at the close of the day. Sydney section. Yeah, beautiful. Sydney section. So Sydney section is when we come to our charts to really look at what has price done for this day that just closed and how am I expecting price to react. So, right, so I know here definitely is a point of interest when I started with the week. So I'm like, okay, yeah, price is gonna definitely reject from here. It's gonna reject from here and give me a trade. And obviously, if it wants to tank, it's going to tank. But the reason I'm like, okay, yeah, I'm gonna have a trade here, but it's not gonna hold long. I'm not gonna hold long is because of the fact that when I go to monthly time frame, this is what I see. This is what I see on the monthly time frame. This has been filled once, twice. This has been filled again, and it's breaking above in the monthly. I break it down to the weekly. I'm seeing this. So there's a high probability that price will want to react around this zone for a buy. So if I'm having a sell, it's not going to be that serious. So I know, yeah, definitely. So we'll go down to daily. So it doesn't mean you won't take sales, yeah, but you should know that these trades are not going to be trades you can swing, because it's important to understand how the market is going to be your trade how. So you know how long you can hold it. You know the momentum pushing it. But this is beautiful because of this is rejection. The price breaks below here and it comes back. Now it comes back with the week as a rejection, but the body is what we're interested in for rejection, not just the week. Awesome. So now we've seen that. Let's go down to 4 hours. 4 hours is an amazing time frame. Okay, so what do we see on 4 hours? Clear. What do we see on 4 hours? Good. So this is rejection, then the break. Okay. So this appeared as a week on a daily time frame, which is it happened very, very fast. And so whenever weeks happens like this, a week rejection on daily, it has to come back for a body rejection before you can have a trade. Okay, but let's dive right in. So this is the close of the previous day. Close of the previous day, which was 26th. Price closed bearish for the day. That's how price closed. It closed bearish for the day. But we are expecting a sell around this region, but we're not just going to open any trade. We're looking for when price has started selling. A continuation is what we're entering. We're entering it in what? London, New York section. Or mostly when the NYC bear opens, because we want to make sure that we are part of the momentum. So now it's very, very simple. Let's try our best to not complicate it, because if we complicate it, we're gonna have multiple entries in the wrong direction, and our bias will keep changing continuously because we're not sure. But if you have this, understand that daily is a rejection. Price has rejected once, most likely it's going to reject twice, and if rejected with the week, it's going to reject with the body. So, but that's not it. That's not just it. We need more confirmations as to why we should take the trade. Now, in my years of trading US Tech and US 30, I've noticed something now. If your Sydney section and the Eastern sections, and if you notice, let's say 2 hours or 4 hours, if you notice that price breaks below the previous 2 hours or 4 hours candle during the Asian section, like this right now is 4 hours candle, so this is 4 to 8, and this is what 6 to 10. This is 2 to 6. This is 6 to 10. So when I see this in the Asian section, let's break it to 1 hour so it will be more interesting. When I see this happen in Asian section, I'm like, yes, price most likely wouldn't want to come back except there's a news and reject on this same level before it drops. You understand? But when I see this on 3 hours, I'm like, or 2 hours or 4 hours, I know that yes, price definitely is telling me that for the day, this is the day it's going to sell. The reason I'm saying this is clear is because of this. Look at how this behaved in the Asian section. You had the gap. There was no sign of sales. There were signs of buys here on fair value gaps. But this, on the other hand, the previous day closed bullish and it rejected. It met its Asian section. This is the first rejection on 1 hour, showing that for the day, there's a possibility that price will sell. So when I see this on 3 hours, I know that definitely I'm going to be expecting a sell when I'm looking at my chart, because I'm interested in looking at my chart only from 9 o'clock, which is only from here, London to New York. So I'm interested in looking at my chart only from here, from London, overlap, it's Asian, from the open of London to opening bell of New York. That's what I'm interested in. London, opening bell, and New York section. So if I don't see a setup there, I'm not taking a trade for the day. Now, the reason I say this is because even if you don't see a setup and you spend your time on the chart, you will definitely see a setup, but it won't be that setup that you're expected to take. So in order to avoid unnecessary trading, over trading, and stress, just keep it simple. If you don't see a setup on 2 hours or 4 hours during the close of 4 hours candle, or the close of this candle, 4 hours, by 12 o'clock, if you don't see a trade, which is from IPA open, you don't see a fair value gap. Let's call it fair value gap. If you don't see a fair value gap here, then you know that definitely I don't have a trade for the day. So you just get a strategy and stick only to that strategy. You won't be having A setups or B setups. It's just going to be one setup, and that setup gives you everything. So what that means is that you can have time to go do other things. You just open your trade, you know where your surplus is going to. Your trade goes in good direction. You have your break even, a risk-free trade. You let it run. So those that have issues with over trading, this is important to you, because to enable you look at your chart only at a particular section, what it means is you're mastering a particular section and you're mastering how to execute during that section. Very importantly. All right. So let's dive in. Let's dive right in. All right, 4 hours. Okay, so I'm going right into our analysis. So now from 6 to 12, I saw there's an IPA. First of all, this is the first IPA that shows that there's a probability that price will what? So from 6 to 12 is an IPA. And I look at my chart by 12 o'clock, which is London section. The moment London section closes, let me look at exactly when 12 is concerning, because every person is going to have different GMTs. So when it's 12 o'clock, perfect. This is 12 o'clock. So At the close, at the close, at the close, before, oh beautiful, before before London and New York overlap, that's when you look at your chart to see what price has done. So when you look at your chart by then, you definitely see this. You won't see this and all this. And when you see this, you see, okay, yeah, you mark out this first of all. This is your POI from here. You mark out, you just draw a line on that week there. That's your POI, and you also pay attention to this. So, but this is your point of interest. You mark that out, the whole candle. You mark that out, and you mark the wick of that candle still. In case you want to open on that entry later on, you know, you open to entry. So this is the flow. You mark out all your daily lows. It's very, very important. All the daily lows for the previous days. So you mark that out. The first one is this, which is the previous day. Then the second one is this. All the lows you can find your eyes on, mark them out. So after doing that perfectly. Alright, so we go back to 4 hours. So I've marked out all those lows, this and this. Perfect. Alright, so now you imagine you're not seeing 1, 2, 3, 4, 5, 6 candles. You open your charts by 12 o'clock and you're seeing this and this, but this is the IP you're seeing by 12 o'clock. 12 o'clock, which is right before New York and London overlap. You open that and you see this trade right here from 6 to 12. So by 12 you see it. So we go down to 1 hour and we're interested in that now. This is how exactly to look. Right there, this is how to look. So let's go down to 30 minutes. Right, this is it. This is what I'm interested in right here. So one thing I know is on the daily, I'm expecting price to sell. The price has been stalling. It has rejected with the week, the previous day. Now it's coming with the body to reject. So I have a good trade here now. And that's giving me, on the Asian section, just told me it wants to sell, which was right here. With the sign, a strong sign that the sellers are in the market. Okay, so now I'm seeing from here to here, but I'm not seeing this. So, but I know that the moment price comes above this green line, this blue line here, and give it a different color, it goes above this green line, I'm expecting price to go above and go below. Now, looking at price 30 minutes now, it gave me this candle exactly by 1:30, which was in overlap, indicating a doji, indicating indecision and also a change in direction of the market. So we're like, beautiful, not good. I'm not interested in all that. I've seen this already, good. But how do I know my entry is my entry? So we go down to 5 minutes. 5 minutes or 3 minutes is perfect for you to see what is what in the market. Alright, so right here, this is the first candle of overlap, and it started bullish. It came to our point of interest. This was the second sign of price trying to sell. Good. So, but we're only interested in price closing below this level and giving us 5 minutes break and retest. 5 minutes IPA. So we've seen on the daily, we've seen on 4 hours, and now we are seeing again on 5 minutes or 3 minutes. So look at what price did. Now price came to this point, rejected, and broke. And one thing you must pay attention to is you must know how to use your footprint chart, because you're adding your footprint chart to this analysis, so you know exactly when to open your trade. Now, if you know how to use your footprint chart properly, then your entry will always be perfect. So you have to wait. So this is going to be my stop loss, because this entry is pre NYC bell open. Now, NYC bell open opens with a lot of volatility, but I've noticed one thing about it. Now, if your trade happens in overlap here, NYC open continues your trade, mostly when your trade is on a higher time frame bias, which is we've seen on daily and we've seen on 4 hours. So this is exactly when, where are you? Good. This is exactly when the stock market opened. You see, did all this and continued. So stock market opened and continued and gave us more opportunities to sell, but we've already had our trade already. So you have to be patient. So back to what I was saying. So look at this: rejection, 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 a break. So right below here is your entry. Now, this is break and retest on 5 minutes. Fill off what 5 minutes IPA is also below our line, so it's perfect. So price came into our line, rejected, 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 and broke. And this candle is a sign of strength for the sellers. And if you look at it on cluster delta, you notice that on this candle there's almost 295 contracts for the sellers here, which is beautiful. So when the price comes up here, you have a trade right here. The moment price goes below here, you have another trade. Now, the free fall of the trades is this. This level was the level we marked on 4 hours. We know that the moment price goes below this level, it's going to be targeting the lows. So your entry right here is here, and we're targeting those. So let me go to 1 hour so that we can show you the risk to reward on this trade. I'm going to review a couple of other trades because I've been on this for a very long time now, and it's easier because I have to do other things. So I'm looking at my chart and I'm in and out. Now, some other persons want to go to 1 hour still. It's not a bad one, but I always like sticking with what I know. So, but 1 hour is lovely still. If you want the full complete IPA to be filled, still perfect. So let's look at how does it look on 5 minutes. If you have your entry here, then where do you set your stop loss? You have a higher stop loss. Now you have more stop loss though, and because your stop loss will have to be here. This is the candle you'll be interested in, but your stop loss will have to be right here. So let's look at it. What kind of stop loss would that be above this candle? From there, about 23.5 pips, which is not bad. So, but let's look at what we look at here. But the reason I like a continuation, which is break and retest on 5 minutes, is because at least I know when to start set my stop loss. You understand? And so all the same. But when price goes below here and below here, we know that's a free fall. So we're going to add some other trades. Add to your winners as you should. So let's look at the stop loss here now. I'm going to take from here to right here. Still 23. So 23 pips is your stop loss. 23 pips is your stop loss. And here is your stop loss. And you're targeting here first before you target here. This is TP1, this is TP2. So let's just look at how the trade went. For the next video, I'm going to use my other laptop to do my analysis, because this, I'd rather use MT5 to do my analysis, because it'll be easier to zoom out and zoom in and show every level that I need to show without having to swing like this. But trading video is always amazing, as it should. So, right. So what does it look like? This is my entry. Not two entries though. And the second entry will be right here. The target's in this. The moment price comes here, I can decide to hold to TP2 or I close, but I put my stop loss somewhere close to it. I know that price will not come to it, which is the reason why you need to go to 1 hour or 30 minutes and look at levels that you can play with. So let's look at this. It was dropping like no man's business. It was a lovely trade. I enjoyed taking the trade. Okay, so we're looking for a level you can drop. Okay, beautiful. So I know price don't want to go above this level. This is the first rejection, which gave us our first trade. So if I'm putting in an entry, a stop loss rather, and I want price to go to this point, look at it. I'm gonna stay away from 1 to this just because of this. Let's call that grid. This is my first TP. This is my TP2. Either way, it's all good. That was good. All right. So what does it look like on 4 hours? Let's show you what it looks like on 4 hours. It's the simplest entry you could ever think of. Simple as hell. Most people that trade Asians, so they can take this, but we stick. Our entries are only at the open of New York and London overlap. That is the only time we take an entry. If it's not then, I'm not taking an entry. It helps you, because that is when the direction always starts to take form when it comes to US100. Unlike US30, most of the time those direction happens pre NYC bell. Now, very few times it happens by 1 o'clock, but when it happens, you can take your trade. All the same, we're looking at 4 hours, we're looking at 2 hours, and we're looking at the candle from 6 to 12. Only then. If there's an IPA, then good. If there is none, you have to be careful. Which is, there's no trade for the day. So if you're targeting when price is going to come to close below a low or a high, that's when you're looking for a trade. But the thing is simple. Our bias from the daily has always been a sell. At this point, it's a bias at the point, not a general bias. So we know that price has rejected once, it's going to reject the second time, and we're looking for a trade. Okay, so that is the end of it. I hope you learned something. I'll be dropping more videos, so pay attention to it and have an amazing day.